Silver is holding above $50, and while a lot of us are celebrating this crazy price movements, something else is happening behind the scenes where dealers are completely backed up and refineries are not taking in any more silver. At the same time, more and more people are trying to get into silver. What does all of this mean? We're going to break it all down in today's video, so let's go. Want to win 100 ounces of American Silver Eagles completely free? Well, in case you missed out on the first opportunity, JM Bullion is now giving you a second chance to win 5 full tubes of 100 coins packed in a custom waterproof Pelican case. There is no purchase necessary, and the newest and latest giveaway is going to end on December 11th of this year. And if you want to get in on this last opportunity, click the link in the description below for a chance to win. And again, just to be clear, JM Bullion is not sponsoring this channel in any sort of way. This is just me wanting to pass this opportunity along to help you guys out. So don't miss out on this. Click on the link in the description to enter for your chance to win 100 ounces of free silver. Hi everybody, and welcome back to yet another video. So silver has been on a bit of a roller coaster lately, and we all know that it crossed into the $50 range last week. And just this morning alone, silver has swung from a high of $53.49 and coming all the way down to $50.59. And the GSR went from $77.91 and then back up to $81.25 in just a few hours alone. So there has definitely been some insane volatility, which has been expected. But again, I mentioned just in the intro of this video that there's something else going on behind the scenes. So let's talk about an email that I received from one of the major bullion dealers, and we can go further into it all from there. All right, so I want to go over the email that I found, and it was just a spot deal that they sent in, but they also had a really important message in the email, and I'm going to read through this entire thing because it's super important. So they sent a market update regarding premiums. They said, "We've been sounding the alarm on various YouTube interviews that a supply squeeze was on the horizon, and it's officially here. Over the past few days, major mints have become backed up, and secondary market premiums have surged, in some cases jumping as much as 400% in just 3 days. For the past several weeks, SD Bullion customers have been able to buy at silver at spot, an opportunity that's been incredibly popular, but due to the sudden market shifts and tightening physical supply, those days seem to be behind us. We'll continue working hard to keep premiums as low as possible and maintain a steady flow of inventory even as the broader market reacts to increased demand and reduce availability. If you've been watching the market unfold, now is the time to stay informed and secure what you need while supplies last." So that was kind of the intro, I guess, a little bit of an email that we received. And they actually also have an article in a different email that got sent out that we're going to talk about here in a second. They also made a video about this. So if you're interested in watching the video that details everything about why the dealers and the refineries are stuck, watch this video. It really explains it pretty good. But I also want to now go into what this article says, because this is going to be kind of what we're talking about in today's video. So I'm only going to read the first 3 paragraphs because this thing is a little bit of a read, and we're not going to do all that in today's video, but you guys can go into this. I'll put the links for this article and everything down below in the description so you guys can check that out. But essentially, this was released yesterday, and it says the silver bullion market is entering uncharted territory. Over the past few days, several U.S. dealers and refineries have halted purchases of silver, and the effects are rippling across every layer of precious metals industry, from local coin shops to sovereign mints. The silver market news: a perfect storm has hit the silver supply chain. The situation began late last week when major dealers announced that they would no longer purchase junk silver or scrap silver for melting. Refineries already facing months-long backlogs have reached a breaking point. In normal times, refiners purchase silver, they process it, and resell the refined metal after a few weeks, financing that gap with the short-term silver leases. But now those lease rates have skyrocketed from under 2% to over 100% in just days. The cost of borrowing silver has become so prohibitive that the refineries can no longer profitably process metals, effectively freezing parts of the physical market. And the big reason behind all of this are the short-term silver leases. And those silver lease rates are basically the interest rates that are charged to borrow silver. And They keep the global silver market running, and when these rates suddenly shoot up, it gets expensive for the refiners, the mints, and traders to operate on them. And many depend on these leases to manage short-term silver needs. So when the rates jump up 30x overnight, the whole system's going to slow down. Essentially, the refineries can't afford to process as much silver. The mints are going to have to pay more to make new coins, new bars, and dealers are going to struggle to restock because the prices are no longer stable. And over the past weekend, the gap between the spot and future prices widened a little bit, and it's a situation that they call backwardation, and they talked about it in the article. Essentially, it's where physical silver sells for more than the future contract does. And this happens when real world supply dries up and buyers are willing to pay a premium just to get silver now. And you can actually see that on this little screenshot here where the futures price of silver is actually cheaper than the spot price of any online dealer or probably your local coin shop are doing. And there's also been talks about how some mints are finishing their 2025 productions a little bit earlier while waiting for the financing costs to settle down due to these lease rate changes. And essentially, it's causing the cost of production to go up, and we as the stackers who actually want the physical silver are going to have to pay for those costs via premiums. Now, I've been tracking the premiums on the major coins for both gold and silver, and in just the past month, they have definitely gone up. From just a month ago, the price of an American Silver Eagle, for example, was around $6 or $7, and now it's going up to about almost 10. But these changes have been very recent, and I've also tracked a bunch of other different ones, as well as you can all see here on this little stacker worksheet. And if you're interested in this stacker worksheet that I have made, it does track a lot of things like the spot prices. You can check out the current deals. You can also check out your portfolio performance and track everything as well. So if you're interested in getting this, I will have a link in the description for this as well. And essentially, the end results are a shortage of new silver combined with the newer individuals who are trying to get in on silver. Something that we did expect when silver broke through the $50 range, and I think we are getting a strong demand of newcomers who may have some FOMO, not just on the price, but now what also seems to be on the availability of silver as well. And those things are going to be correlated to each other, but I think it's a combination of the FOMO driven and potentially the availability now as well. And until these lease rates return to normal, we should expect a higher premium on all physical silver products, if not increasing premiums for the near future. And delays and longer shipping times could also be possible, and we'll probably keep seeing a lot more volatility along the way until this whole thing normalizes again. So as stackers, what should we do right now? Well, as market participants, we will have to pay for premiums for the immediate possession when these type of backwardation events occur. So if you plan on buying right now, you're going to have to understand that you'll probably pay more for something than you normally would. And when it comes to selling, you may get less than what you normally would because it's all about the dealers being backed up. But depending on when you got in, you could still profit. For example, my friend just recently sold some of his silver the other week or the other day, and they were generic rounds, but he only was able to sell them for $4 below spot, when in normal circumstances, I know the local coin shop would do an offer at spot for those exact same coins. So he still made a profit, but could have gotten $4 more per ounce if his timing was just a little bit different. So guys, this is, as we said before, uncharted territory. Now, we've been in the backwardation event before, but not while holding above 50. So this rare event has happened, but it hasn't happened in a way like it is right now. And we're just going to need to hang on and understand where we are in this current state. And in a recent poll, most of you guys have said that you're still buying, while another group is holding off. Some are taking profits, but a little more of them are waiting for a dip. But that's going to do it for today's video. Let me know what group in that poll you would fall into if you hadn't voted yet. Are you a buyer? Are you holding? Are you selling? Or are you waiting? I'd also like to know what some of your local coin shop dealers are saying about all of this situation as it's unfolding. Let me know in the comments what you guys are experiencing or what you guys think. Thank you guys so much for watching, and I'll see you all in the next one. Bye bye, guys.